Livevol. My name is Stefen Choy, and I use my own real Reg T account and use this LVX software to kind of trade, and then you guys can follow what I do and see how I use this product. So let's actually go to my account. Looks like I'm not having a good couple of weeks. It's been down quite a bit. It looks like it stabilized a little bit today. Most of it is just from ZNGA, and I'm cleaning it up a little bit. That a little later. I am kind of thinking of doing, so as you guys know, I've been buying these call spreads in Apple, and if you look at the chart, and it all started with when they had the earnings, and it went down to 500, and I was buying the 510, 530 call spread, and then I've been adding to it ever since. And a few days ago, I added this spread, this butterfly, March 125, 130. March 5, 25, 530, 535 fly for 75 cents, and the max I can make is 425. And I put that on because I thought maybe Apple is kind of wedging right here. If you look at the charts, so if you look at the chart, it's kind of like trading at a tighter range. And even the options order flow, which I always rely on, is pretty much kind of like neutral. So the calls are usually outpacing the puts, but there hasn't been anything dramatic. Like I said before, a lot of it has been like either buying or selling of straddles for those, depending on whether they think Apple's going to move from this position or they're just going to remain the same and trade at a range for longer time period is what people are doing. So you can see today, most of the trades have been, even though there's more calls, most of it has been selling calls on the Aprils and Marches. Most likely, they don't think it's really gonna come in. So these are pretty much just day trading, and then these are longer term, and who knows what they're doing this against. But I thought it was worthwhile taking a shot at this just because it hasn't moved. So I look at it, look at the chart, and it's been getting tighter and tighter. So my thinking is if it stays around here, so you see to the left of here, you see the close value. It's going to be right here, 124, 126, 131. So as you guys know, I kind of like doing trades where if it stays the same and the stock doesn't move, I still am able to make some money. So because I bought the 5, 25, 30, 35 fly, my maximum profit is if Apple goes right to 530 at expiration. But if it trades higher than 525.75 or lower than 534.25, I also will make money. But if you look at this butterfly and the range of Apple, basically it has to be very tight. So it's kind of it's not something I would do all the time. I'm just doing it this time around just because I see the volatility kind of like just hanging out at the low end. And there really doesn't seem like any reason for Apple to either go higher or lower when there seems to be a pretty good balance between buyers and sellers. So I've been just leaving it, and if the Apple does go up, I have the call spreads to make money that could offset the $75 I'm putting into it. I'm actually trying to get more. You see this? I'm actually putting in a 70-cent bid now. See if I can get filled. It's kind of more on the bid side, so my chances are low. But you know, hopefully I get filled and see what happens, and I can go from there. Couple of the stocks. Let me talk about Guess. So this was an earnings play, and I sold some puts and calls. So I closed these down for a nickel. I was trying to close these down for a nickel, but for whatever reason, I wasn't getting filled. Maybe I was at the wrong exchange or something. But anyway, I'm just thinking maybe I'll just let this expire worthless and go from there. There is my other ones that are expiring. Charter. So I sold this put spread, thinking that Charter kind of bottomed out at 125. Looks like that's going to work, but then I used that money to buy this call, which isn't going to work. So in the end, that's pretty much a push. I am looking at Outer. As you guys know, I think they had the tender offer. The company bought, I don't know, maybe roughly close to 20% of their shares for $70, which makes it seem like, if they think it's good enough to buy for 70, maybe they think that's the bottom. So it went through. So I'm short these July 55.65 put spread for 350. My risk is 650. So I should make 33% return by end of July expiration if this thing works out. The thing with Outer that I noticed and Charter, I probably won't be doing more trading just because it's so wide. I can't really get like that kind of too much trading going on. So, most likely I won't be trading it going forward. If it was more active, I think I would trade it. So there's something else that kind of came onto my radar a while back, and it was these 11,000 calls in Axel. April 20 calls I traded. So you can see right here on February 27th, basically 11,000 of these contracts traded. Let me actually go there. I'll click on it. Yeah, so you see all these contracts being bought for all different prices, but maybe like the biggest ones were for around 65 cents. I was curious to why, and this is one of the reasons why it kind of sparked my interest, even though I didn't know Axel too much. You see how long this stock has been range bound? So it's been range bound since basically maybe you can almost say like middle of July. It's been around the 1960, right, in the middle of June last year, and it's pretty much there now. So there's been like this long period of where the stock has been just running along at the same price. I kind of like these kind of stocks in some ways in shorting vol, and then maybe thinking like it's going to break out somewhere. So this was the first time I see like, okay, so it's been here for like 7 months, and then somebody puts on all these call buying, 11,000 of them. So I was kind of curious to see why. I did a little research. Not that I'm an expert at American Axle, but they obviously manufacture, axles and stuff like that. The important part of them is that they derive, I think, roughly 65% of their revenue from GM. So how GM goes is how they go, was what I was thinking. So I let me actually add GM here. GM. Yeah, so if you look at the last 6-month chart, they kind of are moving in tandem. So maybe the sell-off in GM, when they had the bad news, kind of dragged AXL down. Not sure if AXL went down because not sure that people bought this because they wanted to short stock, or they bought this because it was bullish. But either case, this might be like one of the stocks where I have generally a bullish viewpoint, so maybe I'll buy like a call spread and sell a put against it or something, right? Because it doesn't fall below 18 too much. So I'm looking at this chart, looking at it, and I'm going like, okay, well, let me actually go back to the underlying, right? It's pretty well supported. This is the $18 range, and it's not fallen below that too often. So right, so you see, let me actually go to this chart right here. Yeah, you see this big band of all the volume that's traded around this price. So most of the price has been between 19 and 1970, and looks like it's kind of bouncing, same as GM. So maybe it might hang around 19 for a little bit, or maybe there's something going on. They might have some news coming out that's going to propel it out of that range and make it go higher, right? So, I don't know exactly. The issue with this one is the kind of same issue with Charter and Outer. So I like the chart. I like general idea that it's moving tandem with GM. What I don't like is like these spreads, and there's not that much trading. So whatever you do, you're pretty much going to be married to it, which is not that great of a thing to do, right? So, I think for me, I was thinking of maybe doing this, maybe buying this. Maybe I'll buy a 5 lot for 30 cents, and then sell these, the April 18 puts, at 40. Right, so I'll see what happens. So I'm gonna work these two, but what I want to do is I want to do it for even. So if nothing happens and it generally stays right here, I'm a push. And if I'm generally just piggybacking this bet. They bought it for 65 cents and higher, and I'm buying it for 35. So it's a lot cheaper. So I feel like I'm getting a decent bargain. You can't really get too much from stats just because there isn't that much volume. I mean, like the biggest trades is it's this 19 calls, which might be that he's just closing, and then I see like few of these puts being traded, maybe because they think the run up is over and it's gonna go down maybe again. So I'm gonna put these in, see if I get filled. Not sure if I am, but it is what it is, and we'll see how it goes. Let me actually go to ZNGA because I had a pretty big position here compared to my account. So it looks like I'm pretty much closed everything down here, and now I basically have this, right? So what do I do with this? Looks like I'm just naked, pretty much 130, 170, 190 calls. I'm naked 190 calls in ZNGA, and I need to figure out what to do. I was trying to do some maybe modeling. You see, like I look at the stats, and generally you can see right here that even though there's mostly calls traded and the net delta is positive, if you look at the block trades, they've been mostly selling. So for whatever reason, I think these guys generally think it's not going to move too much, or maybe they're doing some kind of buy right. But the fact that they're just selling, I look at the chart, and it could retrace back down to around this 480 range. So there's a lot of things that's happening in ZNGA. that kind of is putting putting my 190 calls in jeopardy. And so what is it that I do, right? Do I just get out of the calls completely, or you know, how do I try to hedge it? So, you know, I was trying to analyze, you know, I'm kind of like learning as I go on this Reg T account, and I'm kind of realizing like maybe ZNGA is too big of a position. Now it would be one thing if I had like normally on the floor I would have like 20 positions like this. Some would be where I'm getting premium, some I'm paying premium, and what I would try to do is even it out to where I'm receiving small amount of premium. What I'm realizing with my account with this Reg T account is basically I can only have one, so I'm either long premium or short premium. I can't be even unless I reduce my account a little bit. So you see right here, this thing just went up. So somebody just sold a bunch of these April 5 puts, these for 30 cents. So maybe, you know, this selling the straddle might be the way to go for me. So let's say I sold 50 of these, and then I sold 25 of these. Let me go to a risk chart right here, see how I look. Right, so if I should get rid of this. If I go to like April expiration and nothing happens, and generally it stays where it's at now, I make 439 bucks. If it goes up, sooner, I make more. But if it goes up close to expiration, you can see right here, it doesn't really help me until it passes the $6 mark where I have all those calls, right? So I have this little dead spot, but I should be okay because this is only talking about if it happens on April 18th. So if it happens before then, I should actually get a pretty good pop on the P&L. But you know, my downside is still, you know, roughly 3,700 bucks. So it's not really that appealing. So I'm trying to model stuff out. I was thinking maybe I'll sell some of, and let me actually get rid of this. So I'm gonna fake these out as though I don't have this position anymore. Maybe sell some of these. So I was thinking maybe I'll sell 50 of these. Sell 25 of these, and then I do the risk chart. And you guys can do this. Is the thing that I like about using the software. It's so easy to model your risk, right? And see the what-if scenarios. So this is kind of like maybe what I can go with. You know, if it goes down to 780 range, I'll still lose 1,000 bucks. If it goes down to like 350, I'm going to lose 4. But you know, I'm thinking it's not going to go down there, or maybe I'll do that, but I'll buy some of these, right? So this is kind of what I'm looking at now. I'm not sure what I'm going to do as of today, but most likely I might sell some of this straddle for like 30 cents or higher and see how it goes, or maybe I'll sell some of this straddle for maybe 58 cents. 57 cents and see how it goes. But you know, when I look at, so somebody sold these, they're selling these right now, and you know, they're selling those. So it's like selling. Yeah, everything in April is selling pretty much right now, because I think people maybe looked at the chart, looked at the order flow, and you know, thinking that maybe nothing is going to happen for a little bit, at least until their earnings, which I'm sure everyone is going to be pretty curious to see what the results are going to be. So, you know, after all this acquisition, going mobile, is it actually working? And if it is, like, how substantially is it working versus what they're guessing in terms of the analysts? I think the thing that I have going for me is the order flow is generally bullish, the technicals are bullish, and all the, to me, like the insider buying is bullish. Now there's probably, you can make an argument if you just strictly look at fundamentals, it's not really the best stock to own or the better ones to own. Let me see. I should go to ZNGA. Yeah, so their forward PE is 110. The next, you know, like if you look at their PE, just that's because they think they're gonna start making money, but you know they're still trying to get out of it. Looks like Don made a little speech at some convention, and then you see the general counsels right here on the insider trading. So in general, I don't think in terms of like fundamentals, it's not what you're doing. But you know, looking at these game stocks, my thinking is that they're just one hit away from, you know, being like a $10 stock if they can get some momentum on one of the games. So it's like a hit-based company, and my thinking is that they'll get a hit going forward. So, but this illustration of what I'm learning from this is maybe what I need to do is control my my theta a lot better, right? So I think if, you know, if I take these shots, right, like in whatever calls, like let's say in these things, if I'm bullish, I took some shots. I think it's important for me to make sure that I balance the shots out. So whatever premium that I buy, I need to neutralize it with some sell. So I'm thinking of maybe like adjusting it to where I buy and sell the same amount of premium each month. And hopefully, if you're 50-50, you know, you'll break even if basically you're a complete push on the stock. But you know, obviously, you're gonna try to be a little bit more correct. And then if you are correct versus wrong, even if you're 50-50, you're doing payout ratios that are better. So that's generally what I'm thinking of doing. So I'm gonna start scanning more. So today, because of that, I was looking at these scans to see which ones I can do. You know, a lot of times I look at the pre-earnings gain and then see how they do, right? So whether it's option or whether it's volatility. So this NBG came up. A lot of times what happens is these things come up, but generally I'm not really that comfortable kind of putting on a trade until I understand it a little bit better. I mean, this is the National Bank of Greece. Who knows what's going on there? And there's probably people who have way more information on this than I do. Maybe I can piggyback some of the trades. Maybe I can say, hey, the volatility is kind of going on the upward trend. You know, I look at the earnings tab, and you know, like you can see how much it's generally moved. So it's something that you can look into, but it's going to take some time. Generally, what I like to do is I'll go through this, and then you'll see a stock that you know already, and then you can kind of go from there. So I'm going to try to use the scan a little bit more, neutralize my premium, and then keep making. Oh, I think I actually took out my option montage window. Yeah, here you go. So, yeah, I'll see what happens. So it's a learning curve. I know for some folks, maybe this kind of movement in your P&L is not easy to stomach. So I do understand that. but it's relative. So what I'm trying to do is trying to maybe normalize this trading. Like if you look at my P&L, it's very erratic. So what I'm trying to do is normalize it and trying to have it go up. So since I've had this account, it looks like I'm still up like about $12,000, which is good. But obviously at some point I was up 50, and at some point I was actually only up 1,500 or something. So and this happened within like a month and a half. So it's too drastic, and I'm gonna learn. But the good news is you guys can learn with me. And if you guys have any comments or suggestions, feel free to contact me. Like I said, I think the software is by far the best software, no matter what kind of trading you do. And I think it's crazy to actually trade not having all this information that's in front of you. For those of you guys who want to try it out, go to livevol.com, and then you can go there and you can get a free trial. So it's pretty exciting. Even though my P&L's been up and down, one thing that I've learned in my past is that if you're not out of all your money, the longer you keep trading, the better your chances. So this Reg T account is new to me. So I figured like the beginning part, like my first 6 months is going to be the toughest, just because, oh, looks like I sold some puts. It's going to be the toughest just because I'll probably make all the bonehead mistakes at the beginning. But if I survive and let's say I break even or make some money, I really feel strongly going forward that I can make a really good return on it. So it's just basically at the first 6 months, it's learning and surviving. And once you do, and you have a system down, you can do pretty well. So one of the things maybe I was looking at was trying to figure out earnings plays to short some premium, and then maybe like doing some of these buy rights. And then I just got filled on Axel. Let's see what happened here. Yeah, I sold these for 40. Let me actually modify this trade just so. Yeah, so I'm 30-cent bid right now. So hopefully I'll get filled. Let me actually see the tick chart here. Yeah, looks like it took a little dive, which got me the fill on the put side. So we'll see. So maybe I'll get filled here. If not, I might buy it for 35 cents. So we'll see. Hope your trading goes well. I'll be here every day, so you guys can actually see all the ups and downs and all the decisions I'm making using this software. But this software is pretty awesome, and I think the more you guys actually see how I use it, you guys will find ways to use it yourselves to help your trading. But other than that, hope you guys have a great weekend, and talk to you guys on Monday. Take care.